Hello, fellow traders. My name is Curtis White, and today I'm going to be talking about the why I've decided to re-pursue the Apex Trader funding. The and I think the why is so important because if you can understand the whys, you can understand if it's right for you. You can understand why you're doing what you're doing. And I wanted to clarify that for myself today. And I'm going to talk about that, but also I think this can be extremely valuable for anyone who's on the fence about Apex Trader funding or wanting to know the pitfalls to avoid. All of that stuff is going to be included. So if you're interested in prop trader funding, what it takes to do it, I'm going to give you that. I'm going to give you a lot of, I think, really great insight and expert insight into this whole process because I had, 8 months ago, I passed 5 accounts to 7 accounts, I think even at one point, and then I decided it wasn't right for me. I came back to it now, changed my mind, decided it was right, and I want to talk about some of those reasons that changed my mind, and then I'm going to talk about some of the difficulties and what you have to be able to do, the level you have to perform at to trade these accounts. Before I get started, I wanted to share that Apex Trader Funding is still offering a 90% off the first month, 80% off each reoccurring month, available right now. If you want to take advantage of it, it's good through the 20th at midnight. Use my affiliate link down below to help support me and take advantage of this great offer. If you think if it makes sense for you, maybe go through this video, you decide it makes sense for you, or you don't. If you want to take advantage of that, use my affiliate link down below. Now, with out of the way, I want to talk about the round trip, so to speak. 8 months ago, I had the accounts passed. And I decided it wasn't right. Now I decided it is right. Time to reattempt this. And so, one of the reasons, the big changes for me is that when you have multiple accounts passed, the monthly fees, funded fees, can be quite high. Obviously, if you're making a little bit per account, maybe not so much. But if you're break even or losing a little bit, it's very expensive. So your funded fees is, and I've always been against these funded fees, but I didn't realize how much they added up to until I kind of got a bunch of accounts passed. I was like, okay, it's $85 per month for each funded account. And so if you have 10 accounts passed, that's $850 a month, so-called desk fee for very little risk. And that just didn't make sense to me. You need to be making some real money in order to justify that kind of fees, or you're just not going to be able to make any money. And so I said, okay, Apex Trader Funding has did a lot right compared to other scammy funding companies, but this one thing is still so big. Especially when you pass, you want to get a reward, you actually end up paying more money. I said, this one thing is enough to where it's just not worth it to me. And I actually did some math, and I showed that if you have a certain scaling plan, and you start with just a $7,000 or $10,000 account, you scale up at a certain level, reach a certain consistency. After about a year, you're almost at the same point anyway. So that's the why I closed my accounts, let them expire, cancel whatever, and decided, okay, I'm not doing this because I wasn't making big money. I was like break even one month, and I was like, I'm paying $850. There's some other things that was different back then too. One thing was that when they would have the sales, they didn't ever do recurring month sales, so there was always a big pressure to pass that first month. So it wasn't something I was looking at doing over time. And then the other thing is they didn't have the free resets. Now they have a free reset in the month. So if you blew the account, they were still going to charge you. So that's kind of a negative thing too. So all those things were kind of in place, and they've changed that. Now you get a free reset in the month. Now there's a one-time fee. I should have mentioned this. Now they have a one-time fee instead of the monthly fee for funded accounts. They introduced a one-time fee for funded accounts, and that changes the ball game because you pay that one-time fee. Now you can have very modest targets, which makes a lot of sense if you're trading multiple accounts to shoot for a very modest target, and then it's a very low risk. So that's some of the changes they made that made me reconsider it, and then I had to look at myself what some of my options were. So I'm going to go through this, and oops. Yeah, let's see here. Okay, so the first one is just with trading, you want anything you want to pursue, you want the goal to be worthwhile enough, or you want the vision to be good enough to aim high enough such that it's worth pursuing, right? And in the biggest mistake that traders make, I would say, when they go live, is trying to do too much. Trying to run before you can walk. That's what leads to the biggest losses. Trader, and it made sense when I started in futures. You had to have a certain target. It made sense to have a certain profit target because the risk was a certain level, and your average trade was a certain size before they had the micros. And that's when I started trading. Actually, the micros didn't exist, and so trading with less than a $500 a day risk or profit target, or let's say risk at least, really was very difficult. And so you needed that $500 a day. And so if you're risking $500 a day, then maybe your target would be at least half that, 200, 250, or maybe around that amount. And so that was just how things worked. It wasn't a very good situation for futures traders. And it's completely the wrong way to think about trading. And most of your prop firms, the type of prop firms that would scale up to $1 million, they started their traders off of $50 a day risk. I know that because I spoke to people in that who run those types of firms and manage those types of firms, and you start off with like $50 a day of risk, which at the time I thought, well, that's nothing, but that's why would you need more than $50 a day of risk if you haven't? Well, put it this way: if you can't make 50 per day, then why should you be trying to make 500 per day, right? So that's the biggest mistake that futures traders make when they try to go live, is they try to do too much, right? Because they want to do something at a certain level, and that was the biggest mistake I made. There's no reason to try to do $500 per day unless you've consistently done $50 per day, right? And what does consistency mean? That could be different for different people, but it probably means at least 3 months of trading, where you're consistent for day trading, consistent majority of days, and you got 3 months of trading with most days traded. Okay, that's what I can call consistency. And so that's one thing. Okay, well, let me continue that. So if that's where you should be, in my opinion, if you're starting and it's not financial advice, but for myself, if I'm starting day trading, I haven't been day trading every day, and then my goal shouldn't be more than $50 to $80 per day for myself, right? And there's no reason to try to do that more than that until you've done that consistently for several months, okay? And if you're successful doing that, in 3 months' time, you'll be making $50 per day, which, if you think about that, that's not a lot of money. And with doing the same exact thing, if you can do that, if you can trade consistently most days, if you are in prop, something like an Apex account, that could be, if you had 8 accounts, that could be $400 a day. If you had 10, that could be $500 a day, right? If you have 20 accounts, they allow you to have up to 20 accounts, that's $1,000 per day at $50 per day, right? And so you can start to see, if you can do $75 per day, that's $1,500 per day. That's $1,400 to $1,500 per day on 20 accounts. So that's the math. Is if you are making 50 in your account, and you're doing it with a certain risk, and you're doing it with a certain consistency, you could be making 10 times, 20 times as much with something like prop. And it's much easier to try to make 50 per day, right, than to make 300 or $300, $400, $500, $600 per day. So that's number one, right? If you're going to try to make $50 per day with a futures account, you are responsible fully for not having big losing days, right? So you may have a goal of only risking $150 per day to make your $50 or $100 per day, but that depends on you being disciplined to shut down, not run up big losing days. And so the risk of trying to pursue something like $50 per day is, and what's likely to happen for many people, is you become undisciplined one day, you lose $500. Okay, you started with this idea you're going to make 150, you're going to risk 150 per day, you make 50, but one day you lose your discipline, you lose 500. And so that's the risk of trying to pursue this if you're not fully ready, so to speak, right? And if you're able to withstand that loss, the other aspect is, okay, well, 500, I have enough money for that, but it's not just about the money, it's also about the psychology of, You have that big losing day. Do you come back in and continue to trade and develop your trading, right? So that's the second risk of trying to pursue that, right? And so I didn't want that. So I'm giving the reasons of why I want to do Apex Trader Funding. And first, when I look at the $50 per day, that's not very worthwhile or meaningful for me. $500 a day is meaningful, right? If it's an hour, I make $500, or $200, or 500. If it's 2 hours, I make $500. That's very meaningful, right? Even $400 being meaningful for myself. And I don't want that risk of having the big losing days. If I lose my discipline and losing, $500 or $1,000, or it could even be more, right? It's just whatever you set it at. And then the other way of thinking about this, right, is the other reason I wanted to do this was because it creates the other option, right, is to do sim trading, and that doesn't. I'm not motivated. It doesn't compel me. It doesn't incentivize me to trade and to do the work, all the work required to trade. Just on the sim, it's not incentivizing enough. You could do it on the sim. There's nothing wrong with that, and it's ideal way to doing it. But you have to be motivated to pursue that, and with the trials, you're doing something a little bit between the sim and the live. So I find that more motivating, and that was one of the biggest reasons I decided to do it. I said, look, it's going to motivate me to trade every day. And the way I'm pursuing my trading is an evolutionary approach, where my goal is just to do certain things on a routine basis. It's not really based on figuring everything out at once. I kind of talked about this in my last video, but it's like, okay, I'm going to work on a few things every day over time, versus trying to figure everything out and then come into the markets with everything figured out. So because of that, I want something to incentivize me to trade, and I find the Apex Trader Funding to do that. Okay. And again, I talked about the evolving my structure. It gives me a structure to evolve within, right? And we'll talk about some of the alternatives, right? And this, you kind of can see, we talked about one, you could trade with a small account, $50 per day, right? And we'll show you that. So yeah, I could trade my live account, targeting something just like $50 per day, but the risk is you lose a lot more, right? So, and that makes sense. It can make sense if you're, for some people, right? And as I said, if you scale up and your psychology doesn't come into play, which it very well could, then with a certain scaling plan within a certain amount of time, you'd be at the same place. You could be at the same place or similar place as if you had the prop funding, assuming you put a cap of a certain amount, say 2,000 or 2,500. That will determine how far you go, really, if you look at it, do the math. And it's more about if you're consistent, right, you get to the same place, but it's a little different path. Of course, you could choose just simply not to trade, right? That's always an option. Don't trade, right? Trade on the sim, and the problem with the sim is there's many problems with sim, but one of the biggest problems for me was not being incentivized. Also not having it matter, not being able to reset it and do all kinds of stuff on it or simply not being realistic in terms of psychology. Lots of things there. Of course, you can change your way of trading, and this I think makes sense. You could trade systems only, but you can do this as well. And I'm building out a portfolio of systems actually to trade. Even as I do this, I'm not just pursuing this, but so that is something that if you are at this certain point, you may decide, look, I'm just going to go fully systematic. That has problems as well, though, right? Everything has its own little set of problems, right? And we'll talk about the 4 things you must be able to do in order for the whole the whole prop funding thing to work. There's 4 things you have to be able to do every day. Before I talk about that, one thing I want to share is there's basically 2 mindsets to the prop funding. And there's really 3 mindsets, and one mindset is a risky mindset. Let me say first, I don't recommend anyone to reset. You get a free reset at the end of the month. Your resets, the whole idea of the prop trading is to limit your risk. And when you start resetting, you start running the risk of spending more than you should. Okay. So the first thing I'll say, if you're doing the prop trials or Apex Trader Funding, don't reset. There's simply no reason to reset when you get a free reset at the end of the month. And I really like the fact that they did that, right? And there's simply no reason to reset. If you blow an account, no big deal. Trade on the simulator, but don't reset it, because you get the free reset at the end of the month in any regards. And the whole idea with prop trading, the whole thing with prop trading is limiting your risk to a set amount per month. When you start resetting, you start changing the dynamics, and you can actually risk more or as much as you would trading without all the reward. Because there's other factors and costs and things with this structure. So one thing I will say, if you're considering this, don't reset. Don't reset. Just don't reset. So with that, right, and there's two mindsets to how you might pursue the prop, and they're not necessarily one mindset. You don't have to necessarily believe that you'll pass in order to do this, because if you simply see it as costing less than losing the alternative. So, one reason I would encourage people to do this versus trading their own money, it's not because I believe that most people can do this. I believe that most people will fail, but maybe they'll lose less money than if they tried to actually trade their real capital, right? And if you can lose less money, that's almost like making money, right? So that's one reason I would encourage people to do this, or maybe if you have an account, you think you're going to go and try to make $500 a day of trading, and you haven't everything in place. This could be a way to avoid losing lots of money if you're disciplined and don't reset. So that's one way to look at it, and that's kind of pessimistic. You're kind of pessimistic, and you're saying, look, I'm doing this even though I don't believe I'll pass, even though I don't believe it's possible. I just want to be able to pursue this in a way where my risk is limited and won't lose more money than I would with the alternative. And then the second way is more the optimistic, and that's where you look at the potential. Okay, if I were to pursue it this other way, even if I were successful in 3 months or 4 months or 5 months, I'm going to be making maybe $50 or $100 per day if I do it properly. Versus with something like Apex Trader Funding, I could be making $1,000, $2,000 per day. Very different type of risk of success there, and basically the same trading level. Okay, so that's kind of the two things to think about. Are you in the pessimistic side, you're just trying to prevent losing money, or the optimistic side? But keep in mind, whichever side you're on, the other side does exist, and I like to keep them both in mind as I pursue this. Right? There are 4 things, and this is the last of this. We'll go through this 4 things. There are 4 things you must be able to do in order to prop trade, to do this Apex Trader Funding, and why most people cannot do it. Okay, cannot do it, and it comes down to really 4 things. Okay, and people will think about the trailing drawdown and say that's the trap, and this is the trap. There really, in my opinion, there's only one catch to the whole thing, which is the funded trader fee. That's the biggest catch, because the trailing drawdown is a little bit of a catch too, but they have to have somebody to keep people from just shot taking crazy amount. And the biggest thing that I think is the only catch remaining is that funded fee, which is a one-time fee now. If it was $85 a month for 10 accounts, that'd be more reasonable, right? The funded fee is still a little bit of a catch, because why would you? They're saying you give you this money to get funded. Why is there a funded fee at all? Or any other than a very small administrative fee? There shouldn't, in my opinion, there shouldn't be a funded fee. Maybe a small fee to a very small fee, or if it is a funded fee, it should be a set funded fee, right? And the new terms are much better, because you can do the one-time option. It's still more than it should be, in my opinion. Like getting your account turned on, what should that cost? Maybe $20, right? It shouldn't be $100. So it's still too high, but it becomes more reasonable. Okay. So if you're, I would think something like $85 a month, unlimited accounts would be reasonable. Okay. That way, because some people won't trade, they'll get their account, they won't trade them. That way, they're not just sitting on a bunch of accounts and not trading them. I understand that, but that would be more reasonable. So that is a catch. But people always look at the catch of the trailing drawdown, which is a little bit of a catch, yes. If you look at the idea that you could be trading, if you're trading your own money, you drop back to zero, you're not down. But if you're on the other hand, in order to trade at a certain level, the trailing drawdown doesn't become an issue. If you're able to achieve a certain level of consistency, that would allow you to make a certain amount. It's not as big an issue as people make it out to be. It is an issue, it's a factor, but it's not the biggest factor. But there are 4 things that you need to be able to do in order to make this work, and most people can't do any one of them, so they're pretty well protected in terms of this business model. 1, you must be able to find opportunity on most trading days, okay? And a lot of trading methods will not be able to find opportunity on most trading days that work. You know, they're more selective. Like if you look at system trading, they don't trade every day. Those type of methods are just not useful. If you can't find an opportunity pretty much every given day, then it's just not going to work. Okay, so as I share this, if you're thinking about doing this, you may want to think about if you can do this as a kind of like your criteria if you want to pursue this. But if you are pursuing this, you want to think about these things as well, because if you can't do these things, then you're going to have a lot of difficulty even attempting to pass. So you need to be able to find opportunity most days, maybe not every single day, but I would say at least 4 days out of the week, 3 days out of the week, you need to be able to find opportunity, and even most times a day, really. So that really leads towards some kind of scalping methodology, right? And you need to be able to trade with an extremely high level of consistency. So, 70%, 80% is 85% is where you want to be as a scalper. And you want to be at very high level of consistency. The day I did my done for day. This is my 16th. What was my 16th profitable day in a row. I've profitable every day in my tryouts. Then I came back in and blew every account, shot taking and doing stupid stuff. But 16 profitable days out of 16 trading days, profitable every day, and not having big drawdowns. Like $300 to $300 with my average risk per day. And and I wasn't, there's 2 types of consistency. If you're getting consistency from taking your max risk, and that's different. If you're taking these big, huge drawdowns, not saying it can't work, but any given day you can blow out. If you're getting consistency through risking a reasonable amount per trade, that's going to be much more viable. Not to say you can't make it work, but in any regards, you have to trade with extremely high level of consistency in order to this to work. And most people cannot trade with that level of consistency. So when we think about making $50 per day, that gets multiplied to 500. If you do 10 accounts, that's only if you can be extremely consistent and you can actually make $50 per day, right? Most cannot do that, right? Especially when we combine it with trading most days, okay? Those 2 things are really difficult, especially if we combine them, right? But that's what you need to be able to do. And the third thing is, even if you can do those 2 things, that just puts you toward the path. You must also be able to manage your risk and avoid blowout losing days, okay? So the way I think about it is if you're profitable most days and you're consistent, you're on your way. If you're even a blowout losing day is something that maybe can be corrected. But if you can't even get one, or if you can't get 1 and 2, then 3 don't really matter. If you got 1 and 2, then you got a problem with 3. That's better, right? Because now you at least see you can do it, and that's kind of what I did today. As I was profitable 15 days in a row, and shut down, did it done for day, and then I also traded max size, which wasn't something I was doing. And one of the reasons I kind of fell into this trap this week was because I planned on doing some. On what I call pushing or shot taking, because at the end of it's my last week for the first month, and I knew that I'll get a free reset, and so I was like, I'm going to go and push, and I see an opportunity to push, and I did it. But one of the things I need to clarify in my plan is I'd only plan to do that if I was, say, down or break even, either down or maybe break even or not up a lot, and I selected the wrong account, and one account I was grinding on to do that, and that was a mistake. That was a mistake. That caused me to lose when on the account I was on should have been protected. So that was my mistake. Not a big deal. I can easily put that up next 10 days or 20 days. Not a big deal, but it just shows how small mistake selecting the wrong account can lead to problems, right? So if you got 1 and 2, you got to still do 3. And let's see if there's a 4 here. Yeah, there's 4 here. That's what the fourth one is. Right. If you can do 1, 2, and 3, you still have to be able to do 4. Which 4, you still have to be able to shut down when you're up. You still have to do a done for day. It'll be done for today. Shut down and avoid giving back. So that's the other thing. If you can do 1 and 2, and then you give back in the evening like I did, or blow out in the evening, or come back in and just lose. If you don't blow out, if you just lose, you're not going to be able to do this, right? And so these are the 4 things that you must be able to do for this prop to work. And they have everything in their, so to speak, court, because most traders can't do these things, right? They can't trade consistently enough. They can't shut down. They can't manage their risk and avoid blowout losing days. But these are the same things you must be able to do if you want to trade, in your own account consistently. You have a little more room, but it's still the same basic stuff. Yes, you can take more risk. You don't have to have the trailing drawdown. You don't have to be as consistent. You certainly have more wiggle room, but that wiggle room comes at the cost of your returns will be probably lower as well. So if you're trading only a few days out of the month, with a system, it's not going to make very much money for that month. If you're having big losing days, right, and you have those losing days, even if you're very consistent, when you net everything out, you're not going to be up very much. If you're taking large risk, you're going to have to reduce your return. So these are not, I wouldn't say these are exclusive to these trials. These are also pretty much exclusive to trying to day trade consistently, right, at a certain level. The difference being if you're in, if you're trading with your money or real money, you don't have to try to do as much on the target side. You can take more risk. You can shoot for a more realistic profit potential. And most professionals can't trade at this level. Most of your professionals, it's a very specialized thing, and you really need to be a elite scalper, elite day trader to do this. Okay, but it's the same thing you need to be able to do to make your $50 per day trading your own futures account. So that's how it shapes up. That's how I'm looking at it. So I hope this helps, and that's all for now.